It's a forex journey, forex mentorship, and I'm going to be teaching. Uh, I'm going to be teaching forex trading. I'm going to be teaching the introduction, the mindset, that's the psychology you have to have as a forex trader. Also, the technical analysis, what or how you can read the price action, how you can read what you see in the market. That's what I'm going to be doing now. So I hope you are prepared. Okay. So the first thing you have to know before entering into trading, or the first things you have to do before entering into trading, is the mindset preparation. The kind of mindset you have to have before becoming a trader. That's why I titled this the Unshakable Trader's Mindset, and I'm going to send a Telegram link to the group. That's where I'll be posting the resources, and I just created it, and then I've already sent the PDF there. So I'm going to send a link to the group. If you are in the wait, how do they share? How do they share? Wow. Okay. I'm going to find a way to send the link of the channel to the group. And in the meantime, let me send the PDF that I'm using. Let me send it to the WhatsApp group so that everybody has access to it. Okay. I've sent it. Can you see it? Okay. Okay. So, okay. So, the first thing, the unshakable trader's mindset, the foundation for success. The first thing you have to do is to do a litmus test, a self-litmus test. You have to discover, oh, there are people trying to join. You have to first discover who you are before venturing into trading. And the reason is, I'm going to give an example first, then I go on. Before trading, I used to think, okay, I'm going to enter the market and make a killing. I'm going to start trading. I'm going to make a whole lot of money. This was way, where was that? Somewhere 2020, 21. That's when I first got introduced to trading, and I've not been consistent since then. Consistency started just around last year, but then last year or last 2 years. Yeah, last year. But immediately I discovered the forex market and I saw the opportunities it can bring to me. I just thought to myself, okay, I'm going to make a whole lot of money and I'm going to cash out from the forex market before 2020, before even 2025. I didn't think of 2025 coming and still being at a certain level. But then I thought I'm going to be a millionaire by 2025. That's what I'm trying to say. So self-litmus test. I didn't know who I actually am. I didn't know how to react to um impulsiveness. I didn't know how to react to greed. You know, you think you are not greedy until you meet the forex market. The forex market can tell you um you can go to the forex market and then you see a move playing out. You see a move playing out. It's not part of your trading plan. It's not part of your trading system. It's not part of your trading strategy. But because you see the move playing out, you just enter into the trade. You trade out of impulsiveness. Do you get what I'm saying? That's what I mean when I say you have to know yourself. You have to do a self-litmus test. You have to ask yourselves, okay, apart from trading, or apart from instances where I've been tested emotionally, what other emotional law do I have that I'm not aware of? Do you understand? Because when you're trading, money is involved, and you know how the conversation can be when there's money, right? You know how the conversation can get when there's money. When there's money, people are, because Charlie, before you even get that money, say, if you understand, before you get that money, say, if you've gone through ups and downs, then you come and put it in the forex market, and then it starts behaving a certain way. You definitely react impulsively, especially if that's your first time trading. So what do you truly know about yourself? Like I said earlier, I thought I was not greedy. I thought that's me personally, without being tested. I thought I was not greedy until the forex market showed me that no. When certain conditions have been activated, greed comes in. Do you understand? So without you facing the test, who are you, or who have you discovered? What have you discovered about you? Sorry. What have you discovered about you? And what are you willing to discover again? You get what I'm saying? So what have you discovered about you already? Maybe you've come to discover that you you react you react a certain way when a certain emotion is involved. But what of other emotions? Have you discovered how you react when other emotions are involved? Have you discovered how you react when you are under pressure? So the first thing we are going to do is a litmus test. It's a self-evaluation system where you use decisive questions or actions to gauge your feelings and beliefs. What do you believe about the forex market? If I give everybody the chance to speak right now, we realize that not everybody believes the same thing about the forex market. People usually equate forex market to sports betting, and I think that's not something you should be doing. But then people will still do what they should do. So, what do you believe about the forex market? This phase is very crucial for self-discovery. Self-discovery is what the market is about. The market is always going to move its way, but what happens is it makes you discover how you want to position yourself in the market. Do you understand? For instance, a swing trader is not going to position himself the same way a scalper is going to position himself. A swing trader will not react impulsively as a scalper. You understand? When a scalper sees 5 minutes impulsive move up, then he's going to chase it. He's going to buy and aim for 90 pips and then exit the market. But a swing trader will wait for 7,000 pips, 8,000 pips, 9,000 pips to hit his entry points before he starts trading. So there's a difference. It's about discovering who are you patient, are you impulsive, are you reactive? All those things are included. So pressure resilience. Do I have the ability to remain calm under immense pressure or during volatile market swings? Under immense pressure. Okay, let me give you a scenario. So when I started trading, I was trading in my house. That I was trading in the house my parents live in. And anytime I try to place a trade, Abby, you know how living in the house is. Mommy will say, come and do this. Daddy will say, come and do this. Your sister wants you to help her with this, that, things are going on. And then you're also, Charlie, the people who are not paying you with the money in your account, they are drinking it and casa. So sometimes the situation you are in or the condition you are in is very pressuring. You are under immense pressure. You are placing a trade. You have to do this, you have to do that. And the worst time for me to be a trader was when I was on campus. Because most times I'm trying to combine everything, you understand? I'm trying to learn, I'm trying to do IE, I'm trying to study for exams, I'm trying to teach, I'm trying to make money. It was immense pressure. So pressure resilience. Have you been built in a way you are pressure proof? Can you sustain pressure? Can you take pressure and then be calm with it? If you can, then you are going to perform well trading or during volatile market swings. Like the last Friday BTC crash. BTC went down over many pips, and then people lost their accounts and they killed themselves. You understand? This is one of the things, or this is one of the things that happens in the trading industry that is very, I don't know how to call it, but I don't like to hear news like that. And it's going to get worse actually. Most of the cryptocurrencies people are holding right now is going to crash more, and whatever is going to happen is going to happen. The reason why I'm saying that, or the reason why I think I'm on the safer side, is for me, I trade forex. I don't trade Bitcoin. I don't trade cryptocurrency. And cryptocurrency is, if you want to trade it mainly, is it's more of an investment than a speculation. For forex, it's a speculation. You are making money off of the price movement in Bitcoin or in gold or in currency pairs or in futures, bonds, etc. Do you understand? But if you are trading cryptocurrency mainly, you are trading it as an investment. You are putting your money there and telling them, I want to make money off of Bitcoin when it gets to 300,000. I want you to multiply the price by my investment, and I want you to give me that money as a return for investing in Bitcoin. So that's Bitcoin. So when the market crashed, many people killed themselves. Even the statistic that they brought on the news is not up to. Then decision separation. Can I strictly separate a trade's outcome from the process, avoiding emotional attachments to the P&L? Can I strictly separate a trade's outcome from the process? Can you separate what the trade, or what the trade turns out to be? If you place a trade and then it hits your stop loss, can you separate the outcome from the process? Can you separate the outcome? Can you say, okay, I woke up and then I watched the markets today, and then I think I am going to be a bear on today's market. I'm going to sell on today's market. The whole process of you doing or taking that decision is going to lead to a certain outcome. Do you understand? It's going to lead to a specific outcome. And can you separate that outcome from the process? Can you wake up the next day and say, okay, I took an L yesterday, but I'm still going to trade my trading plan? That's the process. So you wake up, you do everything you have to do, you rehearse whatever you have to rehearse, and you enter the market. Now, entering the market, can you separate the outcome from the process? Can you take a loss and say, okay, I'm cool with it because I'm expecting a loss? Do you understand? You have to expect losses in the market or in the environment you are in now. That's the trading environment. Losses are always expected. So what you can do, or the best thing you can do as a trader, is to manage your losses effectively. You have to do money management and risk management. You have to understand what risk is. So can you separate the outcome from the process? Would you get overexcited and place more trades and blow your account as you you get what I'm trying to? Those of you on the live who have placed trades before, you know what I'm trying to say. The outcome and the process are two different things. If you win a trade, that's one outcome. If you lose a trade, that's another outcome. There are only two outcomes that you can face in the forex market, right? Winning or losing a trade. But can you separate those outcomes from the process? Or the outcome is going to affect how you think the next day. Then emotional honesty. Am I willing to admit when I'm wrong and exit a trade immediately, even if it causes a loss? Are you willing to? I wanted to use the word humble, but I don't think is the appropriate word to use, because I think the African definition of humble is something. Humble is like, if you say you're humble in Africa, like people expect you to be sleeping on the floor and kissing their shoes. But that's not That's not how I see humbleness. Are you able to accept your mistakes? And you say, oh, I'm wrong and I'm willing to change it? That's how I see humbleness. So I've really defined it for myself. If it works for you, you can adopt it. If it doesn't, you can stick to what you know. So are you willing to accept when you are wrong? Because most times, especially when you are starting, you are going to be wrong most of the time. But your advantage is we are a community. We are going to trade as a community, and then we are going to experience profits together. If we lost to, we are going to experience the losses together. So those who think you are going to a community and we are always going to place trades and cash out plenty money, forget. What we do is we have a system, we have an edge. Do you understand? We have an edge that promises more than 50% win rate. So that's what we use. We patiently wait for our setup. We don't say, okay, we are traders. Every day we are going to enter the market. Every day we are going to enter the. Sometimes you don't even trade 4 days and you find a trade on the fifth day before the market closes. Do you understand? And that fifth day, the trade you find on the fifth day is what's going to, it might even get you sometimes when the pips are, considerable enough, it might get you more than what you would have gotten if you traded the whole week. Do you understand? Because sometimes you place a trade and then you exit at 90 pips, 80 pips. Why? Because you are afraid. But if you wait for your setup to form, if you wait for what you are looking for to form, then you can say, okay, I'm going to ride this till the end. Do you understand? Then it's going to end up making you more than what you would have gotten if you traded the whole week. Do you get what I'm saying? That's all about the litmus test. That's all under this um, page. Then the next page is the trader's psychology. It's not just about charts and money, it's about you. I mentioned earlier. How do you react when your trade is playing out? How do you react when your trade is not playing out? Do you understand? I think I'm saying you understand too much. I have to change that. But it's about you. It's about who you are. Do you get it? So um I started trading. I thought trade is about charts and money. So my laptop was always by me. When I sleep, when I wake up, immediately I wake up now, open that laptop and I'm watching the charts. Do you understand? But the whole point of trading is not to be a slave to the screen. You understand? Is to get money, is to gain money and then gain freedom. As a result of gaining money, you understand? You gain freedom because you have the skill set that can give you that freedom. So every day I'll open my laptop every morning. I don't even wait to. Immediately I open, I don't even check if I'm breathing, guys. I don't even check if my siblings are alive, my parents are alive. Immediately I wake up, no, then I'm opening the chat. Then I'm expecting to make some money by 12 o'clock, 2 o'clock. Do you understand? It's not just about the chat and then the money. It's about who you are. Is trading stressing you more than improving your life? Because somebody who wakes up with the intention of watching the chat, they have not even Charlie, I not even think the person will wake me up say a few day baba. So it's not about, okay, yes, trading is about charts and money. You're going to be watching the charts often. You're going to be making money if you adapt the system that we are going to be using here. But is it restricting you? Is it taking your time away from things that you love to do? Like an example is you have a hobby of reading. Is trading taking your time away from reading? Do you understand? It's not supposed to destroy you. It's supposed to be something that adds to you. And one of the experiences I have that really, I don't know the word to use, but one of the experiences that really impacted me, okay, I think impact is the word I can use. One of the experiences I had that really impacted me is I allow trading to take some of my friends away from me. You get it? So I was so focused on trading. Every day I wake up, trading, trading. What is gold doing? What is GBP US doing? What's Trump going to say? You understand? It's the human part of you. So I was always hooked on my screen, going for conferences, doing this, doing that. It was not giving me time to know or to be who I am. You understand? I always wanted to be with the chat, with the computer. It has helped me a lot in terms of understanding what really happens in the market, but it has its cons too. And then honestly, some of the friends I've lost during this process, I've not, and she maybe as so we move on and we gain new friends as we continue. So trading psychology is the emotional concept of a trader's decision making process. The emotional concept of it. The to be a trader, you have to be less emotional. Doesn't mean you have to be like emotionless. You have to come like stone. You understand? So it took a lot of emotions out of me, like I explained earlier. I couldn't relate to some things very well because I think, Charlie, it reached some place. There are points where you lose big amounts of money and things don't concern you again. Like you see some things and okay, I can live with this, I can live without this. You understand? Like serious things are happening in your life and you've lost bigger than those things that are happening in your life. So you just okay, you can go. You can do your thing, Charlie. You can be where you want to be. I'm not bothered. I'm not bothered. Did you understand? So it's about you. It's not about the chat and the money. You get it. So something or what's not going to be interesting is you become a millionaire trader and then you don't have friends. You understand? The people that you were building with in the first place, you don't have them around again, and then those kind of things. So without the right mindset, traders make mistakes detrimental to their account. If your psychology is not right, if you've not uh, allowed yourself to accept the risk of trading, then you are going to be making heavy mistakes. You accept that. And guys, if you've not placed a trade before, trading plays on your emotions very much. 100% plays on your emotions very much. It doesn't matter what you are trading, forex, whatever. That's why people kill themselves. Because he is in the moment. Like he is heated in the moment. And then he's heated in the moment and he's not even thinking out. He doesn't even fully understand that if he does what he's going to do, he will die. Do you understand? People don't consider those things. They just take, okay, I've lost $100 million. Drink a pill, die. Do you understand? That's not just about chat and money. So what I'm doing is I'm letting you know what really comes together to make a trader. Do you understand? That's what I'm making you know. What comes together to make a trader. I'm not just coming to tell you we'll make a lots and lots of money and then we'll be rich and we'll be millionaires. I beg you. I want to be specific and realistic with you. So emotions like fear and greed can cause irrational behavior. The core conflict is between your system and your emotions. So the highlight is going to be here. The core conflict is between your system and your emotions. Your system, the logic, the rational side of you, your emotions, the impulsive side of you. When I'm trading, I call your emotions the madness, right? Because sometimes a trade can be going in your favor and you just jump. You'll be jumping in the room, you'll be excited, you'll be shaking your hands. Before you see, boom, Trump has come to say something very, I don't want to say because I'm going to post it. I don't want to say something, you understand. But Trump will just come online and come and tweet something, and then you see investors will react to that and you will lose all your money. So your system, what shields you from the market? Because the market moves how it's going to move, whether you like it or not. It's going to go up, it's going to go down, it's going to do what it wants to do. So your system, the protective shield you built for yourself against the market. You get what I'm saying? So for instance, what traders could have done to stop themselves from killing themselves is you put it in your system and say, if I lose this much amount of money, I am not going to. Let me see if people are trying to join. Okay, nobody's trying to join right now. What traders should have done is they should have put in their system, if I lose this amount of money and then I have the thoughts of killing myself, let me speak to this person close to me. You understand? They are like policies. You know how there are some laws you can't break in Ghana, right? If you break them, you face the consequences, you understand? So you put those things in your trading system. Okay, if I lose $50 today, if I lose $50 today, what am I going to do? Am I going to stay still? Am I going to what exactly are you going to do? So those things are part of your trading system. Like I mentioned earlier, the logic and your emotion, that's the impulse. So your system, the logic behind why you place trades, the logic behind you being a trader, what positions you in a place where you can call yourself a trader, the policies that you set for yourself, the rules, the laws. You tell yourself you cannot break this law and you cannot break it. Do you understand? So for something like what happened on Friday, the trader could have put in his system that, okay, if I lose this much amount of money, I'm going to speak to my therapist, for example, or my psychologist. Do you understand? But for those who don't have these kind of policies in their system, they are the ones who go ahead and kill themselves. Sometimes people too have these policies, but you know, when emotions cloud your mind, there are few things you can do about that. It's not just about the chart and money, it's about you. Don't destroy yourself trying to trade, and don't let trading make you miserable than help your life. The enemies of success, fear and greed. I mentioned it here. You see, emotions like fear and greed. Fear and greed are traders' biggest flaws. You get it? Traders' biggest flaws. Fear in a sense that you see a market move happening right now, but because you've lost money on the market many times, you don't trust that setup. Meanwhile, it's playing right in your eyes. You are seeing the setup and you are saying, no, this looks like my system, this looks like my strategy. But you're fearful. You don't want to take that trade. Why? Because I don't know what to, okay, I think I can call it PTSD. Yeah, you lost so much money in the market. When you wake up and you open your laptop and you see the chart now, then you start getting PTSD. And it happens to me sometimes. Sometimes I see a trade and I know I have to pick this trade, but because I've lost money in the market, you see something similar and you've lost money on it before. So your mind is reacting to, again, is reacting impulsively to what has happened or has occurred already. Do you get what I'm saying? That's why I said you have to have a system such that even if you lose on a certain setup that is your setup, it's not going to change your mind from taking that setup the next day. You're not going to change your mind and say, okay, because I lost $30 on this setup, the next day I'm not going to trade it. Why? Because yesterday I lost $30 on it. You get it? No. Your system has to be robust. It has to be conk. If this happening, if this happens, I'm doing this. If this happens, I'm doing this. You're not going to trade based on impulsiveness. And greed. People place trades, it's in profits, $300, $400, $1,000, and then they are saying they are there. Imagine this: your weekly profit target is $600, right? From Monday to Friday, you are aiming to make $600, but you place a trade, and then let's assume trading opens on Monday, then you log on your trading broker, log on your brokerage account on Monday, then you place a trade and you make more than $600, that has exceeded your weekly profit target. Please exit the market. That has reached your weekly profit target. Please exit the market. Now, you are trading to make money, right? You can exit the market in a way and leave like a simple or a small trade running the account, just in running in the account, sorry, just in case it's going to move more than expected. Do you understand? So if you're expecting it to move more than what you are aiming for, then you can take some out of the market, especially if it passes that $600. So for instance, your weekly target is $600 and then you make $800, $200 more, or $200 over your weekly profit target. You have nothing doing in the market again. You have Tuesday, Wednesday, Thursday, Friday to go and chill with your friends to make sure you're a human being, you understand? But somebody will sit there and say, okay, made $600, okay, 200 more, okay, 100 more, okay, 50 more. You understand? You want to make you want to make in trading we call it in trading we call it home run. You understand? You want to hit home run in a single trade. You want to place one trade and make $7 billion. Okay, sit there and wait for it. Okay, and the market will show you that before you were born it was there. So that's fear and greed. Fear manifests in FOMO. You fear. FOMO means fear of missing out. You're afraid of missing out on the trade, so you jump into a trade late. Sometimes the move has happened and then you still jump inside because you don't want price to move without you. And then for things like this, I think the best way to solve it is to read more psychology books, because most of the things that hunts traders in this realm, I don't know other way to use. That's why I'm using realm. Using realm sounds like some spiritual weirdly, but the best way to solve these things is to read more psychology books. Read about the mind. Try and understand how, or try and understand the researches that were made about the brain and the mind before you came to this world, and you understand the deep things that push you to take certain decisions. Also, fear of losing, refusing to set a stop loss. You are afraid you are going to lose. That's why I said earlier. You see over here, emotional honesty. Am I willing to admit when I'm wrong and exit a trade immediately, even if it causes a loss? So you're afraid you will lose, so you don't set a stop loss. Stop loss is the best thing. Stop loss is a non-negotiable in the forex market. You cannot be trading without a stop loss. Forget. Don't ever do that, because the markets can turn anytime. You don't know who is going to speak. You are in Ghana, you don't have the updates. You understand? Maybe Trump has fixed some separate meetings somewhere, and then they don't update you on your most trusted news app. You get it? People have information. They don't update you on your most trusted news app, and then whatever happens in that meeting happens, and then the market reverses and takes everything from your account. So trading without a stop loss is a no. If you want to trade, you have to have in mind that you are going to be trading with a stop loss. If you want to be trading without stop loss, I don't think there's a community for you, because you just find yourself another community that they can trade without stop loss. Me, I don't know how to do it. I'm just promising you what I can give you. So me, I don't know how to do it. Stop loss is a non-negotiable. It's for account management and money management. You trade with a stop loss so you don't lose everything in a single day. You can lose everything in a single sitting. People lost, in case you don't know, people lost $300 million. That's the highest I've seen when I went to look for the crypto, those who lost like big amounts in the crypto crash. People lost $300 million and they are still alive right now. So don't make certain decisions, overwhelm you, or certain outcomes overwhelm you. The manifestation of greed, over leveraging. You place too many trades, you over leverage your account, and then you blow the account. You max out your leverage for, you have an expectation of what forex to give you. That's why I found this very important to do. The unshakable traders mindset. The first thing we have to do before we enter trading, we have to have the mindset of a trader. You get it? So you come into the forex market with out like, I don't even know the word to use for it, Charlie. Some people tell me, oh, if they enter the forex market, they are going to kill it today. And I say, okay, you just enter. Okay, just enter. Just come and experience what it means to be a trader. You get it? Don't come with huge expectations. Sometimes if you start out like this, you can set your weekly profit target to $10, $20. It doesn't matter. Don't look at who is looking. Don't look for who are trying. Don't look for the people who are making big amounts of money. It's your journey, you understand? It's your personal journey. As I sit here right now, I have friends, right, that are making big, like they can sit on one sitting, they can kill the markets like 80K, $50K, but I'm not looking at them. Oh. Me, my own weekly profit target is not even up to $1,000. Do you understand? I get what I want from the market and then I move on. What I'm doing right now is I'm trying to develop a trading system that increases my profits every week. So let's say my profit target for this, let's assume my profit target for this week is $200. Okay, if I'm able to achieve $200 consistently every week, then I'll develop a new system that increases my weekly profit targets to $800. Do you understand? It's your journey. Don't look at somebody and say he's making, he placed one trade today, he went to buy Lambo, then you want to place one trade to come with a considerable expectation, you understand? Those who, especially those who are new to trading. Then the next step, the power of a trading plan, your rule book. Like, I don't know if is it 1992 constitution, but the law Ghana lives by, Sha. Those laws, you understand? Your plan is your peace of mind and your shield against impulse. Again, your plan is your peace of mind and your shield against impulse. Trading is trading is money inclusive, you get it. And okay, I feel like from our part of the world, right, we're not taught how to handle money. We're not taught how to gain money or how to raise money or how to be cool with losing money. So you have to put in extra work. That's all I'm trying to say. You have to know about your mind, especially the things that control your mind that are on a deeper level, that the things that you don't see. So I mentioned earlier that you can start reading some books. Personally, I'm reading The Laws of Human Nature by Robert Greene. I'm trying to understand how to extract my emotions from who I am. You understand? Your emotions, Desmond's emotions and Desmond are two different things. Normally, Desmond doesn't behave a certain way, but if a certain emotion comes into play, Desmond can behave that way. The whole point of this is to try and make you understand the importance of a trading plan, the power of a trading plan. If you are going to make $100 million in the next 10 years, it's going to be dependent on your trading plan. If you don't have a trading plan, forget, you are not a trader. Forget about it. Just forget. Just go and do something else. You are not a trader. If you don't have a trading plan, a trading plan has to it has to consist how you are going to enter the market, how you are going to exit, your strategy, your risk per trade, your position sizing, your position sizing, your trading journal protocol. Okay, so I'll share someone texted me, Dennis texted me and said I should share the book. So I'll share the book in the group. If I can't, I mentioned earlier that the resources we'll be using, I'll be posting them in the Telegram channel. So I'll send it there rather, because yeah, so that everything, because WhatsApp sometimes you know what happens to the documents? They'll tell you the sender this, the sender that, tell the sender to send again, those stress. So I'll send it to the WhatsApp too for those who don't like to use Telegram. Okay, so your trading plan, if you don't have a trading plan, you are not a trader. Forget what who is telling you. You see, sometimes you don't have the right company, you see, and then that's my experience. That's why I'm sharing it. When I started initially, I didn't have the right company. So people just saw me navigating the forex market effortless. So they thought I'm a good trader. You understand? They keep telling, oh, there's one there. You can trade. Yes, those things are true sometimes. You get it. They are true, but it doesn't mean, because at the time I didn't have a trading plan. So what are you trying to tell me? You're trying to tell me I'm a good trader without a trading plan? You get it? So you are not a good trader. You are not even a trader in the first place without a trading plan. Forget it. A formalized trading plan removes impulse. You see the word over here, impulse, by predefining all critical decision points. You have critical decision points. You know that when things are getting heated in the market, when you are sweating like goats that they are going to kill for Christmas, this is what you do. It's in your trading plan, because emotions doesn't give you time to think. You understand? You have your trading plan, it's in front of you. You are looking at it. You are looking at it like this. Okay, you finish placing the trade, so you are looking at your plan like this. Okay, if I'm feeling this immense pressure, this is what I should do. Maybe take some time off the screen, like 5 minutes, 10 minutes break. It doesn't matter. Just take some time off the screen. You understand? That's part of my plan. You see, sometimes I can be sitting down and then I'll be in drawdown of $150. Please don't expect me to sit down. Imagine you wake up in the morning. Sorry. You wake up in the morning, you had an expectation of how your day is going to go. You feel like it's going to be a good day, blah 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 blah. Then the afternoon comes, and then just one afternoon, just one sitting, you lose like $150 in less than 2 hours. And you can see that $150 going, like it's not just staying at the $150, it's going 160, 170. Don't expect you yourself to function properly. You understand? Especially when you know that that money is your last money. Hey, just say, you know what you did to get that money to deposit in your account, pan. So don't expect yourself to trade without having impulse. Wherever money is involved, emotions come to play. So don't underestimate the power of a trading plan, please. As we go forward, I'm going to share my trading plan with you, and then I hope it helps you create a good trading plan for you. The reason why I said shares, I'm not going to impose my trading plan on you. It works for me. I don't know for you, but I'll just give you a template that I use, so that you can also use it and then make some changes to it in a way that it can help you. The next one, risk management, the foundation for survival. Preserve capital today. Preserve capital to play another day. You can have a total of $200 in your account, right? $200 is in your account, and then the market is in a consolidation phase. A consolidation means the market is ranging, is going up and down. It doesn't have a specific it doesn't have a specific trend. That's the word, trend. It doesn't have a specific trend. It's not going up, it's not coming down. It's just moving in between a certain range. Let me see if I can get an example of a ranging market for you. Ranging market. Please, can you see my chart? Can you see my chart? Okay, 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 okay. I thought you guys can't hear me. So this is it. I'm going to show you a ranging market. Oh, and by the way, I didn't take any trade today, because for those who joined Monday 10 sorry, Sunday 10 o'clock. Was it 10 o'clock? Yeah, Sunday 10 o'clock. We did a market watch, weekly market watch, and then I was targeting 104,120 as my profit target. So I was somewhere here. If you go back to the group, you see the screenshot. I was somewhere here, placed my stop loss here, and then I targeted here. Yes. So my profit objective for the week is done. I'm not looking to catch everything on the markets, please. So yes, this is a consolidation phase. Right now, I hope it's clear. Is it clear? Okay, okay. So this is it. You see that it's trading in this range from this top to this down. It's not going outside of that range. You see, it's trading in this way. It came all the way down, went up, came down, went up, down, up, down, up, down, up, down, up. That's a period in markets or in the market where you don't want to be placing trades. Trust me. When a market is ranging or consolidating, forget about placing trades. You shouldn't be aiming to place plenty trades. Just look for one good setup. You target a discount or a premium array, and then you go for that, and then you leave it there. The reason for that is to preserve capital and play another day. That's the whole point of it. So, oh, where's my PowerPoint presentation? Ah, I said maybe Naira. Okay, you're right. I've seen it. Okay, guys, hold on. I'm trying to upload the PowerPoint screen. Okay, can you see it? Okay. Preserve capital to play another day. So you have a total of $200. You are not looking to place plenty trades when the market is ranging or is in a consolidation period. Please don't. Do you understand? You have to preserve your capital to play another day. Maybe today you don't see your setup forming. It's going to form tomorrow. Don't think in the moment. Don't think because it's happening now. You have to do it now. Don't be impulsive. Traders are patient people. Um, when I said this, I just remembered a trader friend that likes fighting. This guy can fight. He doesn't understand any simple this thing cry. He's not patient. So what I can say is traders try to be patient people, you get it. Or some traders are patient people, they're experts. They understand or they've seen it happen many times in the market, so they are not moved. You understand? Preserve your capital to play another day. You have to have this is my policy. 2% rule. I don't risk more than 2% of my account. That's why I have to have a big account when I'm starting. I can't start with $100 and say I'm going to risk 2% of 100. How much is 2%? 2% of $100 is $2. How am I going to gain? How much am I going to gain if I'm Rosemont? Rosemont. Rosemont. Charlie there. Okay. I notice say here make what 2% rule. I don't risk more than 2. So if I have a $300 account, risking 2% is going to be like a $6. It's going to be $6. So this is my rule when I started, but now my rule is 10%. I increase it to 10% because even if I have $300, I can't say I'm going to risk 2%. I'm going to risk $6 and then make, because if I'm risking if I'm risking 2%, I'm looking to make 4% back. I'm looking to make double of what I'm risking. You get what I'm saying? So I can't say I'm going to risk $6 on a $300 account and aim for $12. That's uni money. That's small money. $12. Even if you go and do pong one day, you get that money. So I raised it to 10%. 10% rule, I risk 10% of my account per trade. So if I have a $300 account, every trade I place, I'm risking $30 and I'm looking to make $60. So it's dependent on your account size. As you grow, you get to the point where you're trading on $1,000 accounts, 2,000, 10,000. If you're trading on a $10,000 account, please, and you are free to risk 2%, trading is not for you. To never risk more than a certain percent. I'm using a certain in place of 2, a certain percent of your trading capital on a single trade. That's yours to find out. Mandatory stop loss, I mentioned earlier. Stop loss is non-negotiable. Forget. If you are trading without stop loss, you're not a trader. Non-negotiable. Take profit. Use this take profit tool or system to lock in some profit so you can place 2 trades and then you set one take profit. You set the first take profit to $50 and you set the second take profit to $100. So that when the first take profit hits $50, it's going to close that trade and book or deposit $50 into your account. You see, so risk management, you understand that there's risk. The market can reverse anytime. So you use that $50 as a shield so that the next trade you are going to place, you are not going to risk your own money. You are risking the profit you made on the previous trade. Building mental discipline, the power of routine. My mentor or my leader was telling me the other time, and then my leader is called Pastor Abba Anderson. She's an investment banker of 6+ years investment banking at Goldman Sachs. She was telling me I think 2, 3, 4 weeks ago. When was she telling me this? Was it 3 weeks ago? Yes, 3 weeks ago or 4 weeks ago. She was telling me routine is strategy. That's why I put it in here. The power of routine. I would have left it at building mental discipline, but the power of routine is a strategy. You see, the level you are now, you are used to certain behaviors, or let me not use behavior, let me use habits. You are used to certain habits, and then it has become your routine. So without thoughts, without thinking, you display certain habits without you even thinking. You understand? And let me use myself as an example. When I wake up, the first thing I do is to brush my teeth. And if I'm around some of my friends, they eat before they brush their teeth. You understand? But can't do that. I've tried. I've done it before, but it's not something I can. It's not part of my routine. You understand? So doing it makes me feel like I'm not Desmond. Do you get what I'm saying? So routine. Implement new routine in your day. Start something new. It's not start something new. Something you know can accommodate your new the skill you want to acquire, like trading like this. Build a routine that includes reading or listening to a podcast, a trading podcast. Listen to intellectual people sitting down to talk, you understand? Build a routine that elevates you. So routine is strategy. If you are going to get to, if you want to get to an outcome of $1 million in the next how many years, is going to be dependent on the routine you have now. You understand? Are you someone who is obsessed about increasing the ability of your mind? Do you want to expand? You have to wish to. I wish anytime I wake up, I wish to expand my mental faculties, because I understand that wherever I'm going to be is dependent on what is occurring in my mind right now. You understand? So I have leadership conversations a lot every Saturday. Sometimes you catch me watching some podcasts. You find some airpods in my ear, and I find it hard to read sometimes. So what I do is I screenshot a page on my phone, or a page or two. So if you go to, you see WhatsApp has a personal chat. The update has a personal chat. So I screenshot 2 pages and then I post over there. When I'm going about my day, I open it and then I read. I make sure I finish that 2 page. Routine is strategy. If you can't open the book, if I can't open the book itself to read, I'm going to put it on my phone, because I know that I'm using my phone 247. So instead of my phone killing me, I'm going to make sure my phone helps me. So I screenshot, put it in my notes, put it in my chat, personal chat, somewhere I can go back to and reference all the time. So pre-market routine, you have to have a routine for pre-market. Review the economic calendar. What news is going to come up this week? Is Trump going to talk? Is Powell going to talk? Identify key support and resistance levels, or PD arrays, premium and discount arrays. So the old concept is what is called support and resistance. The new concept, the one I use, is we call it premium and discount arrays. But I left it here because we are beginning. You get it? Mentally rehearse your trading plan. This is very, very important. And anytime I'm doing it, people think something is wrong with me, but I'm not concerned of what people are thinking about me. I'm concerned of where I'm trying to get to. Because if you don't know the music I'm dancing to, how would you understand why I'm dancing? You get me? So I rehearse my plan. I wake up, I sit down. Okay, Desmond, if I'm trading gold at 12:30 p.m. Afternoon, 12:30 p.m. is 8:30 a.m. in New York. So if I'm trading New York session kill zone, the reason why we call it kill zone, not like some killing happens. Kill zone means that is the specific time where there's impulsive price movement. So we call it kill zone. If you place a trade in a kill zone, you can make your money in like an hour or less, or sometimes an hour or two. That's why we call it a kill zone. It's better than waiting for 8, 9, 10, 3 days. Six, Charlie, some people wait too much to make some coins, just some small coins that you make. You wait for like 5 days, 10 days, 7 days. So I rehearse my trading plan this month. I'm waiting for price to take out an old low, because I have a bullish bias. I'm waiting for price to take out an old low. I'm targeting a previous high that has liquidity resting above of it. If price enters my discount array, I'm going to take a trade and then um target my premium array. You see, I'm even saying it off head because I have it in me. I've rehearsed it. It's a part of me now. So pre-market routine, that's what I do before every market. That's why Sunday we did a weekly forecasting. You get it? We forecast the market for the week, what we are trying to look for in the week. Pre-market routine. I'm trying to have a routine. I'm trying to know what I'm going to do before the week begins. When I wake up, I'm trying to know what I'm going to do before the day begins. You get it? Execution phase. Stick rigidly to your plan. Your plan is sometimes going to fail you. Doesn't matter. Stick rigidly to it. You and your plan, you are married. You see, through how do they say this marriage vow? Is it till death do us apart, through sickness and through health. Those of you that have, anyway, avoid impulsive deviations. Focus on the process, not the short-term outcome. Don't be impulsive. Post-market routine. Journal all your trades. Very, 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 very important. Let me see if I can get you a book I used to journal in. I'm coming on. Hold on. Permit me to get my notes and show you. I just want to show you like a page or two. So I'm coming. Oh, me fa bibi o top hanom aba sisi ano. Me dwane afi call ne so. Me fa bibi o top hanom aba sisi ano. Na mo dwane afi call ne so sa. Okay. So this is how when I first started journaling, I'm not sure you guys will see this. When I started journaling, this is how I was journaling. Can you see that? Oh, this is how I was journaling. Can you see it? Is it clear now? Okay. I'll take I was about to say I'll take a picture and post in the group, but some things I've written over here, I'm trying to hide it from. Okay, I'll find the page that. Okay, I think I found a page that. Yes, found one. I found one. I'm sending it to the group. Okay, it's in now. You can check. Have you seen it? So, so I used to draw the chart, not draw it bar for bar, but I used to do a line. I used to use line to, you get it. I think there are more pages. There are more pages over here. I want to find, I don't know why the camera cannot, the camera is not. Okay, okay, I know what to do. Hold on. I know what to do. I'm going to expand the camera so you can see it on the live. I've been expanded, right? Can you see me? Okay. So this is what my first journal. This is how it looks like. You can see that this my this my first journal. So I'll draw. You can see that I know you will not understand what this means, but I know what it is. You see, and then what I did too is to put, so you can see. Oh, it's not going to show. Uh-huh. You can see that, right? I take screenshots of my trade or my setups and then I put it in my notes. You see, okay, Paul has joined. Let me show it again. So this was my first journal. When I started journaling, this is how it looks like. I used to draw the lines. You see the lines. You can see this is a consolidation. This is an impulsive move up, down, up again. You don't understand. If you see it like this, you will not understand what it means unless you see the writings. And even if you see the writings, you may still not understand. But anyways, my journal is my book. I know what I wrote over there. You see. So this, so I used to draw the chart. Sometimes I use a whole page to draw the charts. And where's the other one? So when it got full, I went on to I found out that journaling is actually very powerful. So I went on to buy another notebook for journaling, and this is it. Sometimes I'll draw the specific candlestick. I'll draw what it looks like. I'll draw the high and then the low. I'll mark out everything. Why am I mentioning all this? And guys, I added this book. So to build a routine, you can do some research. You can look into this book. It's a very good book. Everybody knows it, Atomic Habits. And also there's a book I want to introduce to you guys, but I'm feeling kind of, it's like I want to gatekeep, but let's see. Because I'll post this and I'll post this video and people will see it. But we don't gatekeep here. This is a book. It's called Money. You can screenshot Money by Rob Moore. Have you screenshotted? Know more, make more, give more. That's a book I'm going to read after reading The Loss of You. Oh, you didn't see it. Money. You can screenshot or I'll send it to the group. Rob more. Rob more. Know more, make more, give more. Rob more money. Okay, so journal all your trades. I specifically went to take my, or I intentionally went to take my journals to show you because journaling is very important. What I write when I'm journaling is I write the thought processes I have when I'm trading. So when I place a trade and then all of a sudden my mind is telling me this one shouldn't have placed this trade, I quickly write it down. You see, so I write the time. Okay, I place a trade at 11. What happened? Like what went through my mind immediately I placed the trade? I felt like I'm going to win this trade and I'm going to make a lot of money. Okay, I write it down. 30 minutes later, I feel like, oh, I should have not placed this trade. 25 minutes later, I feel like I'm going to lose all this money. 1 hour later, I'm feeling very greedy. You understand? I'm writing everything that is happening in my mind. That's why I said, can't take a picture of all the what's going on everywhere and send to the group. I can't take a picture of everything and send because there are some things I don't know all the people in the group, so I can't share it with everyone. You get it? But journal all your trades. Why? Because you want to understand what's happening in your mind. You want to, and even if you are not going to be journaling your trades, please journal your your, your journal your life. You understand? Just sometimes write. You have a question on your mind. You put the question down and you just start writing. You have, let's say you want to build your financial capacity. Maybe you want to be earning $500 a month. Put down in your journal, why don't I have $500 a month? Why don't I have this much amount of money? Why don't or why can't I access $1,000 immediately, like out of nowhere? Why don't I have this much amount? And then write solutions and then follow the solutions. I'm a testament of it. I've done it and then I've seen results. So I'm not going to force you to, but if you have like mind busting questions, put it in your journal, answer it. Just write everything. Write what comes to mind. So you understand the thought process so that you can change how you think. You get it? You can change your routine of thinking. That's what we said earlier. So routine is strategy. If something is going on every day, like it has become a routine for you. So sometimes you don't see through it. You get it? Make it a thing to be changing your routine almost every 3 months, and until you find a routine that cuts across every part of your life. You find something that it doesn't matter what you are doing, you can still perform what you have to perform. You get, review what went well and what didn't. Ask yourself, what went well today? Okay, today I took my A plus setup. Okay, what didn't go well? Oh, I was not in the right state of mind. I just finished fighting with this person, so it took a toll on my trading. This happened, and prepare for the next day. Easy peasy. Cultivating mental discipline. We are running a marathon, not a sprint. I mentioned earlier, you're not going to hit home running a single night. You are not going to forget. You are not going to get rich overnight. You will not. You will not get rich overnight. You will lose money. I'm just making you will lose money, but you gain money too, and then you are going to gain more than you will lose, but only if you are patient. Your goal in the beginning is consistency and survival, not Lambo. Let me hurry up and finish. I think we've done more than focus on a steady equity curve, not a vertical one. Most people want their equity curve to be vertical. It's always going up. So they want to they start from 100. Tomorrow they want to see 200, 300, 400, 500, 600,000. No, sometimes you start 100. Tomorrow, no, it will go to 20. It doesn't. It's not every day that it's going to be ascending. Do you understand? So focus on a steady equity curve, not a vertical one. A steady equity curve can start like this, go down before coming up again. You get it? It can start like this, go up again before coming down, like the market movement. You understand what I'm trying to say? So a steady equity curve, not a vertical one. Focus on something that is going up. Focus on something that is straight. Winning mindset, the power of belief. If you have a fixed mindset, people are people who say, I'm a bad trader, I don't understand this. You've not even started trading, you've qualified yourself as a bad trader. People like this, please, I don't want to work with you because there's nothing I can do. There's nothing I can do because you've already psyched your mind that you're a bad trader. You understand? All I can do is tell you, see, you're not a bad trader. Years ago, I also thought I was a bad trader, but here I am trading, and I've pushed the boundaries of what I perceive trading to be. Growth mindset. Have a growth mindset. You tell yourself you are not consistently profitable yet. You don't understand this yet, but you believe you can. Should have highlighted the belief. It's about what you believe in. It's about everything you are is about what you believe in. Do you understand? Believe you can do something. Believe you can change something about yourself. Believe you can change your routine, change your practices. Believe you can change a certain flaw about, maybe you've discovered a flaw about yourself. Maybe you lack conversation skills. Believe you can build it. Don't say me, this is how I am. I lack conversation skills. You understand? Believe you can build it and start building it. It's not just believe. This is not self-affirmation. No, 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 no. This is making a constant, an intentional effort to change a situation. You see, believe, have a growth mindset. Don't limit yourself and say I'm a bad trader. Some people, if you not even started anything about trading, and then you start saying, oh, trading safe, you heard it's like bets, it will take your money and things. You see, you believe that. That's why you are not getting money from trading. Embrace the challenges and losses as feedback, not as a definition of your ability. Don't take a loss as a definition of your ability. Don't think because you've taken a loss, it defines who you are. You're a loser. No, you are not a loser. You can work on it. You believe you can change it. Managing stress and avoiding burnout. Irritability. Some people get easily irritated because of the market movement. It can be going up. Maybe their daily bias is bullish. It can be going up, then it will come down, then to go down, 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 come up again. And they get easily, they get burnt out, they get irritated. You see someone is so irritated by the market movement, he starts sweating, he start walking up and down. Some people can even punch their laptop. Hey, laptop that you use plenty money to buy, then you punch it again. Why? Because you are losing money. You see, fatigue, lack of focus. Lack of focus can make you do many things. You can lack focus and then go and place. Some people, let me not even say some people, me myself, I've experienced it before. Instead of me placing a 0.01 lot size, I went to place 0.1. The rest is history. They drank that money like cold tea. You see how you can just pour cold tea in your mouth? You can just pour cold, you can just take the tea and pour in your mouth cold like that, and you swallow everything. They drank the money like cold tea. Tea imu or imu imu Joe, like tea that is cold. You understand? Yes. Over trading, if you lack focus, you are going to do many things. That's why I was saying earlier that routine. You start the day, you rehearse what you are going to do. In the middle of the day, sometimes you are going to get plugged out. Things happen, you understand, but follow what you are following. Over trading and under trading, people place trades than they are not supposed to. They over trade. Under trading too, you can have two setups to take, but because of fear or whatever, because you are burnt out, you just place one trade and then take regular breaks. These are the solution for it. Take regular breaks. Exercise and maintain a healthy lifestyle. Sometimes your sleep schedule is what is wrong with you, because you sleep, you wake up, you want to take a trade, you want to be active, you want to watch the charts, but you didn't sleep early, you know what happens. You didn't sleep early, you didn't do something right. And then in the middle of trading, you feel sleepy and you tell yourself, oh, let me sleep small, I'll check the trade later. Maintain a healthy lifestyle. Have hobbies and life outside trading. This is the point of focus. Have hobbies and life. Have a life outside. You are not going to be. Don't aim to trading. Like I mentioned, a trade with money you can afford to lose. I think this is the most crucial. Money you can afford to lose, so that when you lose it, you are not pained by it. You can afford to lose that money. You've already psyched your mind that you can lose that money. So when you lose it, you are not pained. The most valuable book you would ever read is your trading journal. A journal turns random trades into a structured, analyzable data set. It is essential for self-mentorship and continuous improvement. So if you are writing your thought processes, what is going on in your mind as you trade, you're going to realize that if you sit down to read that book again, you're going to get understanding on a deeper level, because you finally understand the thought processes that are pulling you back. You understand? Yes. So the facts, that's the log the objective data, the pair you are trading, the entry amount, the stop loss amount, the TP amount, a pre-planned exit, and then a profit and loss. Profit You have to have all these facts in your trading journal. I have them over here. I have them over here. You see, in the book over here, what do you see there? 12 a.m. I even wrote the time here to 8:30 a.m. So you write the time, the pair, the entry. Let me hurry up. The psychology, how did you feel? Confident, scared, greedy, impatient, vengeful. What's going on in your mind? You write it. The setup, document why you took the trade. Include screenshots or screen recording of the thought process. You understand? While you are screen recording your screen, you can be speaking, you can be telling, or you can be speaking on why you took the trade. You see, the review, what can you learn from the experience? What will you do differently next time? So always journal your trades. Weekend, sit down and then review it. Think about it. Find better ways to solve the problems that keep occurring. The 90-90-90 rule. So it's said that 90% of new traders lose 90% of their starting capital in the first 90 days. Why does this happen? Lack of solid plan, no risk management, no trading plan. I mentioned earlier, I explained earlier why you have to have all these things. Solid trading plan is a no-no. If you don't have, don't start trading. Risk management. If you don't have a risk management plan, don't start trading. If you don't have a trading plan, don't start trading. So why am I giving you this statistic? I'm not giving it to you to scare you, but rather to know what happens so that you can know you can exempt yourself from this 90%. The paradox of the market: to win, you must first learn how to lose. And we are going to be trading as a community, yes, but I'm not going to um uh, exclude the fact that you will lose money. You will lose money, and even you being a new trader is, and I always consider myself a new trader. Why? Because there's more to learn. Even this session we are doing right now, I'm learning new things. Do you understand? So you must first learn to lose. You are going to lose. Sometimes the whole community is not taking a trade, but you will see some assumesi somewhere. You go and take some trade, blow his account, and you come and say in the group, eh, he has lost his money. What? Please. You first have to learn how to lose. You will lose. You will lose. Sometimes you will lose so much you will not want to continue again. I'm just giving you facts. Sometimes I remember one time I lost $1,000 in a day. That was one of the worst days in my life, Charlie. I didn't even know how to cry. I didn't even know whether to cry or not. Trading is not about being right all the time. The best traders are often right 50 to 60% of the time. The key to their success is managing the losses. You're not going to be right every time. I'm telling you, you're not going to be right. Sometimes you're only right 50 to 60% of the time. The key is, if you are right that 50 to 60% of the time, then you have to be placing trades that are in your favor. Do you understand? You don't have to be placing trades that you don't have confidence in. You get what I'm trying to say? So 50 to 60% of the time, you have to be right. You place trades that benefit you. A losing trade is not a failure, it's a cost of doing business. You have to change your mind, you have to define how you see things. If you see a losing trade as a failure, your growth is going to be slow. You get it? Your growth is going to be slow. It is a cost of doing business. Yes, you are doing business in the forex trading space. Okay. You are doing business in the forex trading space, and the cost of you doing that business is the loss that you've acquired. It is a successful execution of your risk management plan. The goal is not to be right. The goal is to make money over time. You see, so there's a fixed mindset. He says I'm a bad trader. He accepts losses as a failure. This is a growth mindset. He sees it as he's not profitable yet. He can be profitable in the long run, and also sees losses as feedback. Actions before our next session. Please write your why. Write why you want to be trading. Write why you want to be in the space. Write down clearly why you have to trade and what success looks like. Write what success looks like to you. Maybe to you, success looks like knowing how to read the market. To someone else, success looks like making $1,000 per sitting. That's what. So redefine what things looks like to you. To me, success. To me personally, Desmond, success to me looks like consistently consistent profitability. If I'm consistently profitable, then I will think to myself, okay, I am successful now. Until then, I am succeeding. You get it? Keep this document visible as a motivator. Draft your plan framework. Start structuring your trading plan. Define risk limits and initial entry or exit ideas as a dedicated note. In a dedicated note, put a setting like how I've done. You put your trading plan in a different notebook. You can even paste it on your laptop, the back of your laptop, such that before you trade, before you open it to trade, you can see what or you can see the things you have to do when you open your trading account. Yes. Practice routine for the next 2 weeks. 2 weeks, commit to a 5 minutes pre-market and post-market mental routine. The key word here is mental. Even if you are not trading live, the key word here is mental. So it engraves what what is in your trading plan. It engraves it in your mind. You get it? So 5 minutes pre-market and post-market mental routine. Even if you are not trading, recite your trading plan and basically what is in your routine. I mentioned earlier that routine is strategy. So what is in your routine? I can't disclose my routine because it's long, and then we've done over an hour, so I'm looking to finish right now. Okay, questions and answers. What questions do you have? What questions do you have, or what questions do you want to ask based on trading and based on what we've done here today? Questions and answers. I'll answer your questions for you. And before we go to the questions and answers, let me read this. If a man empties his purse into his head, no man can take it away from him. An investment in knowledge always pays the best interest. That's a quote by Benjamin Franklin. If you learn something new, it doesn't matter if you understand it now or not. Just keep learning every day. It's going to be relevant and useful to you in the future. You understand? So yeah, an investment in knowledge always pays the best interest. Don't look to make money first. Although making money is important, money has to be in your account, Charlie, or else things will happen to you, Bob. Yeah. So make money, but gain knowledge. You see, gain knowledge, but make money. Gain wisdom, but make money. You see, yeah. So I'm not saying don't make money. I'm not saying don't do things for. You see, this me, I don't know how to put it, but I'm not saying money is bad. Make money, but also learn, because what is in your mind is what is producing your current financial level. You get what I'm trying to say? So that's it. If there are any questions, please let me know. I'm done with today. All I have to do is to cut the meeting and then upload it on YouTube so that, okay. Yeah, oh, you can speak. Dennis Kese, please. Okay, it's off. Okay. Okay. Yeah, Dennis.
So I wanted to ask this question. You were saying something. You said we should get some questions.
You should get what?
The first one was, I think, why you want to trade. I want you to like kind of clarify like how many questions we should get. so you can be sure.
Okay. So the number of questions you should get is not specific, is not how do you say it? It's not fixed. You get it? The number of questions you should get is not fixed. You can write. Maybe you see trading to be something you can dominate in. Write it, because sometimes you see trading is money based. So if you don't have a clear vision of why you want to trade and you come into the trading market, you can shift from what you aim to do in the trading space and then go and be doing something else. The reason is maybe your your initial plan for trading is you see it as a hobby. You see it as something you want to understand, something you want to know how to do. You understand me? You write it down and say, okay, I'm entering into trading because I want to know how to read the market. That's your initial. I'm saying this because you can get swayed anytime. You understand? I'm not saying write it and keep it fixed. You get me? But write it and then keep evolving the definition of what you've written. So maybe you write today, I want to know how to trade because I find it as something interesting, right? Okay. As you go on, you say, okay, at this point, I know how to trade at this level. And then this is the amount of money I want to be making out of the level I've gotten to in terms of trading. You get it? So write your why. Why do you want to trade? When I was writing my why, I wrote over there in capital letters, I am trading because I want to make money. I'm not hiding any. I don't seek to understand this market one bit. I'm telling you, the market has traumatized me. PTSD up and down everywhere, every day. Sometimes I don't even feel like taking trades. Why? Because the market has beat me. It's now that I found my footing. Do you understand? Why? Because all those times I was not clear on why I wanted to trade. I first got introduced to trading. My brother introduced me to trading, my older brother. So it was something I was doing. I was just doing it because I got introduced to it. Do you understand? I didn't have a why. If I had a why, and then maybe my why at that time was to understand the price movement. If that was my why, I would have been making money earlier because I would have hit my objective. I knew how to read charts 2 years ago. I knew how to predict where the market is going 2 years ago. But I was not making money 2 years ago. Why? Because I didn't have a direct why. Do you get it? And it's not just your why, it's just your self-litmus test. Is trading going to be uh for lack of is trading going to be can trading fit into your lifestyle? You see, you ask that question too. Can you dedicate time to learning how to trade? Do you see it as something progressive, like you can be going forward with it? Do you see it as something, okay, I can be going forward? I believe if I continue going forward with it, I'm going to excel at it. That's what I want you to write. It's not like specific, like write. People say write down these 8 questions. No, it's not limited to 8 questions. Even today, I can sit up and then say, okay, I have a new question on trading. Why do I want to trade? Okay, I've written that down. What do I look to achieve with trading? Okay, I've written that down. What do I want to create in the trading space? I want to create a trading community where I teach my fellow family. I don't consider uh, this thing. I don't consider the community just some community of people. I consider as a family. So I want to create a community in the trading space where I can teach my friends, my family, people that are close to me, so I can teach them how to trade. You get it? So is your goal evolves over time. The questions you ask yourself, the self-litmus evolves over time, and then it should be evolving over time because every year you have to have a fresh perspective on trading. You get it? What do I want to achieve this year with trading? Okay, this remaining 2 months, what do I want to achieve with trading? You get what I'm trying to say? So mindset, prepare your why. Your why should always be it should always be visible. If it is not visible on paper, it should be visible in your mind. Why do you want to trade? You get it? So if your why for um if your why for trading 2 months ago was to understand price movement, okay, you understand price movements now. Now, what is your why again? Okay, my why now, why do I want to trade now? I want to trade now because I want to make money. Okay, so your why for trading has evolved. It has gone a step further. Understand? Dennis, I hope I answered this question. Okay, okay, okay. And Paul, please, you can unmute and ask the question.
Was about the trading plan. So I wanted to ask you to my point and how to trade. As if you ever change.
Can you please repeat your question? I want to get it fully.
I was saying ever there was this about the trading plan. Have you ever got to a point where you had to change your trading plan? At one point you realize that maybe your plan was to go something.
Okay, okay. The question is clear. Um, hmm, wait, oh. You said at which point did I have to change something about my trading plan? That's the last question, right? What was the first one? I got distracted a bit.
So I'm saying, do you ever change your trading plan?
Okay. Yes.
You have.
Is that all? Can I speak?
Yeah. So it's basically the first part of the question is, have you changed your trading plan? Yes. If you have, then at what point did you realize that?
Okay.
Okay.
Yes. I've changed my trading plan severally. From for the past year and some months, I've been changing what my trading plan looks like, or or what my trading plan is. And the reason why I change it is because it, the conditions of the market evolve. You get it? The- Gold some years back was not gold some years back will not give you 700 pips a day. Never. It will never do that. But nowadays, gold can give you 800 pips. 800 pips a day. 800 pips. So my trading plan evolved, or I tweaked it because I realized the plan I was using some time ago was not favorable to today's market condition. I don't know if you get me. Like, it's in my plan to wake up early. We are in 25, 23, 23. My plan was to wake up 4 o'clock every day. You get me? 4 o'clock every day. That's the time the market opens. That's the time the market opens. How do I say this? Eh, That's the time the market opens midnight in New York. So you see, we are using the New York time to trade, right? If it's 4 a.m. in Ghana, it is 12 a.m. in New York. You understand? So I want to be up at 4 a.m. But as time went on, I realized the move I'm looking for doesn't happen from 4 o'clock. It happens at 6 o'clock. It starts from 5:30, 5:45, 6 o'clock into 9 o'clock. You get what I'm trying to say? So I had to upgrade my trading plan. I studied that and I saw that okay, it's not going to favor me because I try and put things together. I want to sleep early. Sometimes I have things to do. Then I push them aside because I want to sleep early and wake up at 4 o'clock and trade. You get what I'm trying to say? But market evolved. Market market evolved. Market was not waiting for me to, it's not going to wait for me to be up at 4 o'clock and be waiting some. No. Market will do what it wants to do at the time it wants to do it. You get what I'm trying? So I had to tweak it to favor current market conditions. So at the point where you change your trading plan is if you realize it's not favoring current market conditions. So again, some years back, trading gold is not going to give you 700 pips, no. So when you are setting your stop loss, you know that okay, you can leave your stop loss at 30 pips or 40 pips or 20 pips. Why? Because gold some years back was not, it doesn't move volatile as it's moving now. You understand? It's not whipsawing people in the market. You understand? But you steady market trend and you realize, oh, now gold is giving 500 pips and above in a single day. Then you can tweak your trading plan and say, okay, since this is happening, I can add 20 more pips to my stop loss, or I can add 30 more pips to my stop loss. You get what I'm trying to say? So your trading plan evolves per time. And the point where you have to change it is the point where it doesn't favor current market conditions again. So was that what was I able to answer the question?
It's clear.
Okay, okay. So are there more questions? Yes, let me work on sending the Telegram link. And are there more questions? I'll be online for more questions. If there are no questions, then we can end it here and then I'll go. Okay. Thank you. Thank you, guys. Aish. Okay. Okay. So no more questions, right? Okay. So thank you for joining and then I hope it was impactful to you. Please. Thank you guys too. So I'm sending The Laws of Human Nature, the book I told you I was reading. I'm sending it to the group. And guys, if you are reading the book and then you want to discuss some things about some things in the book, you can just put in the group. You want to host an online session, you found something really amazing in the book, or whatever you are learning about you. It doesn't have to be me every day coming to say, okay, we have a live, we have this, we have that. If you if you get a revelation of something, you can say, okay, tomorrow we have a submission, 12 o'clock, let's all be online and I'll be there. Thank you. I'll be there. Honestly, I'll be there because I always want to seize the opportunity to learn something new. I'm not going to dull on myself and say, oh, me drew your cramp, or me drew baby a cramp. The goal I've set for myself, I'm not even 0.5%. I'm not there. I'm not there. The goal I've set for myself, I'm not there. So you can just come in the group anytime and text, okay, this is what you want to do. It's a community, please. Let's grow as a community. It's not a one-man thing. And also, if you are in the community for long and you think trading is not for you, I'm saying this so that you don't force yourself to thinking you have to be a trader. You have to be it's rigid. You have to be a trader. If you're in the community and you think trading is not for you, please, if you have any business idea, start talking about it so that we can all help. I'm sure everybody will want to help because I don't see this community as something that is going to break. But I don't see it as something that is going to be non-beneficial to people. You see, we have plenty people, but how many people are here currently? 9. It shows that some people just want to be here because, okay, they heard about trading, it sounds interesting to them, you get me? So if you have something that you want to do, please, you have the advantage of a community. It doesn't matter who will laugh now or who will laugh later. Post it. You have something you want to, okay, I have this that I want to do. Okay, I'm posting it. Let me see how many hands I can get to help me with this. You get the hands, fine. You see, we are growing as a community. That's my vision of a community. But I saw, Dennis, I saw your hands up. If you have a question, we can settle it before I go offline. Or if you don't have a question, then we can move.
Oh no, it was good.
Okay, okay. So guys, thank you for joining. I'll do the video. I'm not very good at editing, so I'll just do some small just do some small. If you know how to edit, please please let me know so that please let me know so that we can work on the video being good for so that everybody can see and understand. But I'll try my best to upload it within the week. Thank you guys for joining, and then we'll meet next week. Bye. Okay.